everyone. It's Jen Bourikas with my trusty cup of coffee, ready to have another episode of Realty Talks. And I've asked Roger Hendricks to come and have a conversation with me today. Thanks for joining me, Roger.
Good morning, Jennifer. How are you?
I'm great, thank you. Roger is the Director of Financial Services with Disclose All Financial Services. And Roger, you've been in business for just shy of 20 years, right?
That is correct, Jennifer.
Excellent, excellent. Well, Roger, the reason I asked you to come was because of your knowledge and expertise and my ability to ensure my clients are informed and educated before they make that buying decision. I thought it was important to introduce you to my clients and future clients, of course, and share your knowledge and expertise, because I don't think it's harmful to somebody to have, even be armed with knowledge and expertise when they're trying to make a buying decision. Would you not agree?
That's correct, yes, definitely.
Excellent. Well, Roger, one of the things that the conversations I have with clients is I like to connect them with these resources before they make that decision. And I think before they are even having the conversation with the mortgage broker, I think there's some key questions that you and I can chat about that maybe a potential buyer wants to ensure they've discussed with you before taking into consideration before they actually make a purchase. And I think one of the questions is, why is it important for my clients to consider their own personal circumstances before they purchase?
To determine your circumstances is a big decision when purchasing a home, Jennifer. Mm-hmm. For example, are you single? Are you married? Do you have children? Is it the first home that you're purchasing? Have you sold a home? All this information we use when we determine your financial analysis. Good financial planning and understanding will help you determine your goals. That's very, very important. Very important also is to understand affordability. That is the key ingredient to good and bad times. For example, what we're going through at the moment, which is COVID. What I mean by affordability, having far more disposable income so that you can afford your monthly costs and bills when these unforeseen circumstances.
Right.
Yeah.
I think that's key. You touched on something, affordability, and whether my clients are going to a bank or they're going to a mortgage broker, at the end of the day, I remind my clients consistently, this is the message I always say to them, is you're the one who's paying your mortgage. The more that you actually plan before you make your decision, the happier you'll be at the end of the day. God forbid life circumstances happens, like nobody was anticipating COVID, were people even ready financially to not work for a couple of months, right? And while I have buyers out now who are still making buying decisions, I'd rather know that they can afford to buy curtains after they've purchased. Maybe they want to go on a trip. Maybe their next stage in their life is planning to have a family, right? So I think that's key to consider their personal circumstances. Absolutely. What do you recommend with respect to finances and their purchase? So should somebody dip into their RSP? What other financial vehicles should they actually consider?
All right. Jennifer, Canada offers two fantastic savings tools. You have your TFSAs and your RRSPs.
Right.
TFSAs being your tax-free savings accounts and your RRSPs being your registered retirement savings plans. When it comes to a down payment on your mortgage, these are the vehicles I would use for my down payment. I love the fact that it's a large tax-free portion of money that you get in these vehicles. And these are also always the two vehicles that I use when I start saving. That's
right.
Crucial.
But I think it's important that people actually have that conversation with you, because there's so many hidden parts, right, to tapping into your RSPs. Have you purchased before? Because there's only certain vehicles that are available depending on what your history is with respect to purchasing real estate. If you are a first-time buyer, there's ramifications to tapping into RSP and that expectation by the government that you actually pay it back. It's not free money. There is the expectation that you actually do put the money back into your RSP, correct?
That is correct. So you have a 15-year term, Jennifer, to pay the money back.
Right.
I like the fact that you are able to take a larger portion of tax-free money and add it towards your mortgage payment or your mortgage as a down payment. It's just a great start to where you're heading towards on obtaining the phenomenon, which is great. Yes,
that's good. Is there anything else that you feel is key that you need to discuss with the client before they actually take the next step in talking to a mortgage broker or their financial institution?
Yes, Jennifer, no doubt about it. Budget is super important.
Yeah,
very important. Knowing that you can comfortably afford your commitments on a month-to-month basis, getting those curtains that you'd love to add into your home once you've purchased your home. So talking about little things that would pop up unnecessarily that you can actually afford. Very important also is starting to compile a list of assets and liabilities before speaking to your mortgage broker so that you can understand what your purchasing power is, what you can actually buy for. And then also, very important, taking copies of all your insurance contracts along so that you don't duplicate any benefits when you sit in with your mortgage broker. Any extra money that you could possibly have could actually be used as a contribution towards your mortgage, which is great.
So by saying that, I think it actually pays off being prepared. That's the girl guide in me coming out as a girl guide for years, and I've always taken that be prepared and philosophy with me. Having that conversation with you means that it could ultimately help people plan better for the future. It's a painless process to have a conversation with you. I think a lot of people are really afraid to sit down and talk about their finances, but I think at the end of the day, it pays off. There might be things that you're duplicating, to your point, and why duplicate payments, right? Why have that extra money coming out of your pocket at the end of the day when that actually could be going towards your mortgage or future savings, right?
That is correct. You don't want to be double paying for something that you already have. So really understanding your insurance benefits or payments is crucial.
Absolutely. Well, Roger, I think you and I could probably have another 3-hour conversation about finances and how to prepare people. But, at the end of this video will be your information. If someone wants to reach out to you directly, absolutely. You are so open to having conversation. Myself as well, if anybody's interested in having that conversation about what's going on in the market right now, I'm certainly not seeing the prices being reduced like everybody was anticipating. So it's going to be very interesting. We're starting to see multiple offers in certain markets again. So, with CMHC changing their insurance requirements prior to July 1st, we're going to see more buyers hitting the market. So I think it's key that people are very prepared before they hit the ground running and looking for a home, and it just makes it a more seamless process. So thank you, Roger, for joining me today. I really, truly appreciate your time. And
thank you for everything.
Thank you. Really I look forward to future conversations with you. Absolutely.
Thanks. Have a great day further.
Thank you. Take care. All the best.